Welcome to Horn Business Insights. Today we answer a big question many people ask. Why does Ethiopia block international banks? Why is Ethiopia one of the few countries in Africa without big global banks like Standard Chartered, HSBC, or Citibank? In this video, we give you a clear, simple, and factual explanation. Let's begin. To understand today's policy, we must look at Ethiopia's history. For many decades, Ethiopia followed a state-controlled economic system. After the fall of the Derg in 1991, the government kept tight control over banking, insurance, telecom, and aviation. These sectors were seen as strategic and sensitive for national security. Because of this, Ethiopia kept foreign banks out to protect the young banking sector. One of the main reasons Ethiopia blocks international banks is simple. Local banks are not ready to compete. Foreign banks have huge capital, advanced technology, global experience, and cheaper loan systems. If international banks entered suddenly, many local banks could collapse. Ethiopia has more than 30 domestic banks, and most of them are still developing. Allowing giant banks from China, Kenya, the United Kingdom, or the United States could instantly dominate the market. So, the government uses a protection first, opening later strategy. Another reason is economic control. When a country allows international banks, foreign companies may control loan decisions, interest rates, foreign currency access, and business financing. Ethiopia's government prefers to control these areas because the country needs foreign currency for imports. The state manages mega projects like GERD, the economy is still vulnerable, and financial stability is a national priority. Foreign banks could influence Ethiopia's financial direction, which the government wants to avoid for now. Ethiopia has a long-standing foreign currency shortage. Allowing global banks could make it worse. You see, foreign banks usually move profits outside the country, use foreign currency transactions, and send dollars to their headquarters. This could increase Ethiopia's US dollar shortage. So, the government protects the system to control the flow of foreign exchange. Banking is not just business, it's security. Banks handle personal data, company finances, government transactions, and intelligence-related financial flows. If international banks enter, sensitive data might leave the country. For a country dealing with regional instability, this is a serious concern. Ethiopia wants to strengthen its cybersecurity and financial systems before opening the market. Even though Ethiopia blocks international banks today, it is slowly preparing to open the sector. Recent government strategies include allowing foreign investment in local banks, strengthening regulations, upgrading digital banking, modernizing the National Bank of Ethiopia, and improving financial laws. This means Ethiopia wants foreign banks, but only when the country is ready. Ethiopia is actually one of the most attractive markets in Africa because of several reasons. There's a population of over 126 million, low banking penetration, fast economic growth, increasing digital payments, and, well, a huge unbanked population. International banks like KCB, Standard Bank, Ecobank, and others are really just waiting for Ethiopia to open the market. So, when Ethiopia finally allows international banks, you can expect a few positive impacts. There will be more foreign investment, better banking services, cheaper loans, improved technology, stronger competition, and of course, new job opportunities. But there are also some challenges. Small local banks may struggle, profit may leave the country, the government will lose some control, and foreign banks may dominate the market. Opening the banking sector is a big decision with big consequences. The government says it will open gradually, not suddenly. The first step is likely to be foreign banks owning shares in Ethiopian banks, then foreign banks opening representative offices, and later on, full banking licenses. Many experts believe Ethiopia may allow the first international banks after economic reforms stabilize. So, why does Ethiopia block international banks today? The simple answer is to protect local banks, control the economy, manage foreign currency, and build a stronger financial system before opening. Ethiopia is moving slowly, but honestly, the future will bring change. If you want a video on when will foreign banks enter Ethiopia, top banks that want to enter Ethiopia, or how opening the banking market will change Ethiopia, just comment below. Thank you for watching. This is Horn Business Insights.